Yeah. Hello everyone. Thanks a lot for joining us in this, weekend live stream. We have Siddharth here with me, and we'll be discussing about whatever is happening in the market. So there are a lot of things happening in the market that have caused concerns to investors. We'll be talking about the performance of our portfolios. We'll be talking about, how the various strategies have been doing for us. What are the key things to watch out in the market from earning season to, you know, uh, to what is happening, the geopolitical scenario, the bond yield rises, etc. So, Siddharth, let us start on this.
Yes, absolutely. Yes.
Okay.
Do you want to start with the portfolio performance?
Yes, I'll just start.
Yeah.
Okay. So we have a few slides prepared for you guys. We'll start by talking about the portfolios, right? So, we'll start by talking about our slightly larger portfolios, which are the momentum and the balance, right? You can see that the performance in the last 6 odd months have been quite strong in both of these portfolios, right? From March, the portfolios have really picked up, right?
Correct. Absolutely. I think we saw this big rally, obviously, in July and somewhat probably carrying on in a little bit in August as well.
Yes.
But September, what do you think about September? How has it been?
September has definitely been volatile, but it is not out yet, right? I think the momentum is still going strong, right? But corrections will be part of the process, and we'll evaluate, right, if it will go on or not, right?
Correct. Absolutely.
So if you look at 3 years, 6 years, 3 months, 6 months, 1 year, you see that all of these portfolios have built up strong performance. Let's look at the larger term performance of momentum, which is one of our key portfolios. You will see that this portfolio has clocked in 50% plus CAGR since inception, right? And it is about to complete 4 years in existence, and a lot of exciting thing happening with this portfolio. Recent rebalances, so that we reduced a little bit on the capital goods side, and we added materials, financial, etc. in this portfolio, right?
Mm-hmm. Can you elaborate on why we did that? Like, why did you think capital goods would have gone down?
Definitely. So, we'll see in the presentation also, right, that capital goods right now have become a little bit expensive, right? The valuations of the infrastructure sector segment have, sort of peaked, and the new projects clearances have not gone up that well, right? And global supply chain is still very crowded. So people are becoming concerned about valuations in that space. But on the other hand, we are seeing sectors like the financials, materials, right, with the growth happening in China, do much better, right?
Sure. And in terms of, so you briefly mentioned China as well. There's obviously a lot happening in China. Do you think any of that will also have an impact, not just on this, but like on the broader sense as well?
No, definitely. I mean, obviously, these things will have an impact, right? And we already saw a big resurgence in energy profits in the last quarter, right?
Mm-hmm.
Similarly, materials and metals are picking up. Crude oil did correct recently, but with the escalation in Israel, right?
Mm-hmm. Yeah.
Again, that could have an impact, right? So obviously, the global scenario would definitely impact our markets, right? Yeah, I mean, obviously, now we'll move on to a little bit to our smaller portfolios, right? Portfolios that have more small caps, and you will see these portfolios have done even better than the larger portfolios in the past few months. Let's look at small cap portfolio, right? Small cap, it is the best performing portfolio of last 6 months. It has done incredibly well during that point in time. Obviously, volatility has come up in the last month, right?
Mm-hmm.
After the correction that happened in the beginning of September to now, there has been a little bit of volatility, but I think the small cap momentum is still holding up, right? You can see the new India portfolio again has been a standout, right? You can see the performance there because the manufacturing sector itself has done incredibly well. Siddharth, you can see that the manufacturing based small case of ours has picked up very good performance, right? And people are quite excited about this portfolio as well, right?
Absolutely. And I think that is reflective obviously in the New India portfolio that we're talking about here, where the Atmanirbhar sort of theme is very sort of present. Just looking at September again, I think there has been a dip, but it looks like most of it has been recovering
Right.
from our portfolios and even from an index perspective.
Right.
Do you think that will carry on in the next month or so as well?
Definitely, and we will try to dig deeper into the valuation and different concerns that we might have right now. But I think the interest in India, interest in emerging markets, especially India, remains quite strong. Domestic market, domestic investors are still incredibly enthusiastic about the market. So there is no reason for the rally to not continue, right? Obviously, we have to watch for different cues that come up in the broader scenario, and we'll try to understand all of this in the presentation, right?
Sure.
So here we have the Wright small cap performance. You will see that again, this one has done incredibly well since we launched it. And the performance sort of speaks for itself, especially in the recent times. We'll quickly go over our latest portfolio, which is the Alpha Prime. Alpha Prime, it's the high risk portfolio, right? So in the crash that happened in the beginning of September, Alpha Prime got a big hit, right? Which was as expected, right? You have highly valued stocks, high momentum stocks in this portfolio, lesser number of them, then obviously the impact would be larger, but it has also been picking up, right, at a good pace recently, right? And we are positive that once the momentum builds up, the pace of rise in this portfolio will again be quite strong. And we keep on repeating, Siddharth, right? I think people sometimes ask me that why do you keep on repeating that, this is only for high risk and don't invest into it if you're not a high risk investor. But I think that has to be said again and again, right?
No, absolutely. And I think the cornerstone of obviously what Alpha Prime is doing is that it's investing only in 10 stocks.
Right.
Means it's highly concentrated compared to our other portfolios, which obviously has a very good benefit, right? Like if the stocks do well and if the industry is doing well, so on and so forth, the portfolio will give those sort of alpha returns that we're looking for. But obviously when there is a crash, then because of the lack of diversification, there can be some sort of a correction that we can see in this portfolio, right? Which is why it's a high risk, high reward sort of portfolio that we're looking at here.
And I think last month was a big lesson, right? That taught us what high risk and high reward means, right?
Correct. Yeah.
Definitely. So yeah, I think that's all about our portfolios, different small cases, how they've been doing. I think the performance has been good and we are very positive about, things going forward as well. Like we said that recently we did cut a little back on the infrastructure capital goods segment because, those stocks are a little bit overvalued and there's a lot of valuation concerns. On the other hand, we're seeing very good growth happening in financials with the rate hike, I think. The rate pause, right? Continuing and the hawkish stance, right? We could see the creditors still do well and, we're seeing material and metals and energy do well with the crude price hike and commodity price hike happening across the world, right?
Correct. Yeah. So let's get into it. I think we will start talking about a few of these sectors and what else is involved.
Yes. So we'll start by talking about the trends in the sector performance in the recent quarter and the last quarter, right? So as we can see, Siddharth, that infrastructure developers, right, have been the biggest beneficiaries. And then your telecom services with the 5G growth, you have capital goods segment, bank, power generation, real estate, all of these sectors which have been highly linked towards the infrastructure and, who've been gaining because of the capex spending by the government, right?
Yeah.
Those have done incredibly well, but on the other hand, you can see that refineries, paints, agrochemicals, different sort of chemical industry hasn't done that well in the recent time, right?
Correct, absolutely. And I think given the sort of high budgetary allocations that have happened this year from the government, I think that was evident that, a lot of these very infrastructure related, capex spending related sectors would do well. And obviously, as we are approaching election season as well, I think some of these sectors will probably continue to do well if the government spends more, right?
Definitely. And we also see that, the biggest sectors of, 6 months back, which is automobile, right? It was the best performing sector. has sort of seen moderate growth. Similarly, you can say FMCG has seen moderate growth. And even though IT hasn't done that good in terms of earnings, still, the performance has been good there, right?
Correct,
Which
correct.
is quite
Absolutely.
interesting.
I think and what do you think about like power generation and let's say renewable as well? Do you think that is something there is obviously a lot of interest from the government there? Do you think that will do well as well? Because a lot of people have that, there's a lot of green energy stocks that people keep talking about. So just wanted to.
No, definitely. I think that's a resurging industry in itself, and it will be big in the future because not just the government, I think the whole global markets, everybody has a focus on moving towards green, right? Moving towards sustainability, moving towards cleaner power resources. So I think that should have a resurgence. Plus, the power sector as a whole in India itself, right, has a big growth path because India is a growing country with, the capex spending again, putting money into a lot of manufacturing sector. So there's a big need for power by itself, and the green energy segment itself is, has a huge growth path ahead, right?
Correct.
So I mean that is a big focus that investors definitely should have, right? Let's talk about industries like a little granular level. Start we will see that we can see financial long-term lending industries have done well. You've seen public sector banks have done really well in the last quarter, right? We've seen a resurgence happening. We've seen pharmaceuticals do well. We've seen telecom and power generation, and all the segments like we discussed are doing quite well. On the other hand, we are seeing pesticides, chemicals, paints, varnishes, all the chemical related segments not do that well. So why do you think that the chemical segment is under pressure?
So I think there is obviously one is the input related costs that we're seeing across global markets, right? Like they've typically been high. We're seeing a lot of challenges from an inflationary perspective. We are also obviously, when we start talking about food inflation, right? Which is where a lot of these pesticides and agricultural products would typically come in. That has been high, at least in the last few months. So that could be one of the reasons, I think. Another aspect here is obviously a lot of the inputs that go into coming up with a lot of the chemicals and the underlying raw materials that are there. That is also probably under pressure given that a lot has been happening in China and other global markets, other global economies as well. So are there other reasons that you feel chemicals is putting, has been under pressure? Especially, I see paints and varnishes there, which is a little interesting given that real estate kind of isn't on a booming side. So it seems like a contradictory there.
Right. I think see, consumption also has a point to play here, right? Consumption, like we have wrote about, hasn't researched, very rapidly in the past few quarters because of high inflation, right? So the demand for paints and varnishes because of that could be impacted on, again, the global demand also plays a big role, right? When we saw the resurgence of specialty chemicals a couple of years back, so that was because, this manufacturing was shifting out of China to India, right? But now that, the supply chain in the global market itself is under pressure, the growth is not that robust in the global market. These companies, which have become extremely overvalued, right, are facing pressure from investors in terms of their prices. Right? So if you compare the valuations right now, I think chemicals are one of the most overvalued sector in the economy right now, right?
Correct, absolutely. And I think so that's a very interesting point, which I think we are seeing. There's a lot of data that's coming out which is showing that private consumption, so to speak, has been stagnating. It is in some cases it's dipping, in some cases it's not really growing at the speed that the other sort of factors that are leading into Indian GDP have been sort of contributing, right? So why do you think that is the case? Is it primarily to do with inflation and these sort of concerns about recession that were there earlier in the year, the banking crisis, etc., that was happening, or is there more at play here?
No, see, definitely, inflation is a big concern, and because of inflation, rates are high. When rates are high, right, then people are not borrowing that much. So I think all of these things come into play, right? It is, this is the biggest driver, right? The inflation and the interest rates are the biggest driver that is driving this. Plus, obviously, the consumer sentiment is hit because of all the concerns, right? Even now, I was looking at some chart on Twitter. Somebody had posted, right, that market has crossed 100,000 points in very small spans of times also, right? It has taken very small spans of times to reach the all-time high, right?
Yeah.
This time, even though it took more than a year to cross an all-time high, investors are really concerned, right? Because there's a lot of reasons, right, with the global geopolitical, a lot of things are happening there. There's a decision fear in the US, right? Rates are high. So I think all that impacts investor sentiment and consumer sentiment as well, right?
Got it. And do you think in terms of, so when we speak about, private consumption, there's also this angle of how there was a lot of pent up demand post pandemic, and we saw a little bit of burst in 2021 and 2022. Do you think that could also be a reason that people have sort of gone through this very high phase of spending and then are sort of now focusing on, let's say, other aspects?
That's a very interesting point, right? Like we have reached a peak of consumption, and the growth will not be that robust from there, right? You will see the growth plateau out, even though the consumption might remain high, right?
Correct. Yeah, I think that's an interesting point as well. Yeah.
Right.
Interesting.
So let's also look at factors, right? And if you look at factors, and these are published by Nifty, these mostly look at large cap stocks, but still they'll give us an idea about how factors have been performing. You see, different factors have done mostly better than the market in the recent times. Alpha as a factor, momentum as a factor are still very strong in the last quarter. And even though, if you look at the previous quarter, you would see low volatility and quality, etc., have also done well. But still, alpha and momentum seems to be the two strongest factors in the last couple of quarters, right?
Yeah, this is quite interesting. So I think in terms of so if you look at, let's say, dividend or value or low volatility, they're still doing well. But they're not at the same level as what is happening. We're seeing in sort of quarter 2 for alpha and momentum, which is so. Why do you think that is the case? Do you think it's a lot of it is driven through the earnings that we're seeing coming out in quarter 1 and potentially in quarter 2 as well?
See, I think this is all because, we have clearly entered a bull market in the last 2 quarters, right? I mean, last 2 quarters have been bull market, and in a bull market, you would see a momentum and alpha do better than the other factors. But yeah, like you said, value is still strong. There is still a big focus on value right now, right?
Yeah.
And even now, if you look at the IPOs coming out, if you look at, which companies are getting attention, right? People are still focused on valuations, right? There's not a very clear shift out of value. There is still a big focus on the numbers, right? With the different companies coming in, right? Even the IPO that are coming out, if they are fairly valued, they get a good response. And if the IPO itself is not valued fairly, then it doesn't end up getting a very good response in India right now, right? So I think the value focus still there, and with the rates being high, the hawkish stance being maintained, so that I think value will still continue to be very relevant, right?
Sure. And so I think a question here a lot of the audience may have is also that, in quarter 2, we've seen probably a lot more volatility than we've seen in quarter 1. Do you think that is the reason why momentum and alpha sort of as factors are doing much better? Or do you think that sort of goes against them as well?
I think see, these factors themselves have been impacted, right? We can see our alpha performance, our momentum performance, right? They have seen that impact of volatility, but still, despite that volatility, they have done well, right? So if you look at the week where the volatility was the strongest, during that week, maybe a low volatility and value must have done better than momentum, right?
Sure.
But on the whole 6-month level, I think these factors have been doing better in that sense. And we expect them to be better, right? There's no strong cue for that performance to sort of take a hit, right?
Sure. No, absolutely.
Right. So now let's dig a little bit into the economic scenario, the factors that are impacting that will impact the direction of the market, right? So first thing is, I think people have a concern on valuations, right? We keep on hovering near the all-time high, going up and down around it, right? And I think investors have that concern that, are we overvalued? What's the concern on the valuation side, right? So if you look at valuations of that, you will see that we'll talk about in the next slide. The Nifty valuations haven't touched a very drastic number yet, right? We're still on the safer side on the valuations. And if you look at different segments in the market, right, you would see that while certain segments have become overvalued, right? So let's say your infrastructure, your specialty chemical and real estate, right? They are a bit higher than their 10-year averages. There are other segments of the market, right? From PSU banks to oil and gas to banks, auto, which are still under their 10-year average valuations, right?
Yeah.
So I think the market has a mixed valuation picture. Certain segments are becoming overvalued and certain segments are still undervalued. There are a lot of opportunities for us to pick up stocks, if we have this valuation concern, right? The market as a whole has not blown up in terms of valuations, right?
Correct. And so just to sort of deeper into this, obviously why infra and real estate and chemicals might be doing well, we've kind of covered through government spending, etc.
Definitely.
On that front, why do you think obviously oil and gas, there's a lot of crude oil volatility is happening, markets have been very fluctuating over there, but banks and PSU and even private sector, why do you think that is potentially undervalued here based on the 10-year average that we're looking at?
Right. So I think, see, PSU banks have been the undervalued segment for the last couple of years, right? PSU banks, what they have shown is they have strengthened their balance sheets. They have shown very good growth numbers, right? Their fundamentals have improved a lot, but the prices haven't matched up to that, right? People still did not trust PSU banks till like maybe a year or so ago to give them that performance, right? So I think PSU banks, if you look at them, right, they haven't got that attention, even though they have been doing extremely well over the last 2 years. And now people are getting a little bit more confident about their potential, and that's why we're seeing that resurgence happening. But I think even for the last couple of years, PSU banks have been a very good value pick, which has sort of performed, right? And which is what we have seen in the last month as well, right? That PSU banks have continued their performance. Similar things goes out for private banks. We saw that, right? If you look at post-COVID, right, banking did not recover for more than a year, right? When the overall market took off, right? And I think those numbers are playing out in terms of valuation for these segments. And they are a little undervalued right now, and they still have a way to go. Even though we'll talk about it in the next few slides, that their growth might also be a little bit stagnating right now, right?
Yeah. And just to sort of touch on auto as well, because we've been seeing a lot of numbers where even in Q1, I believe, and currently Q2 also, a few of the companies have reported strong sales. And obviously a few of the companies are sort of showing varied sales for 4-wheelers, 2-wheelers, 3-wheelers. Why do you think that is the case? Do you think there's something from a consumption perspective, again, do you think that is having an impact on the auto sector?
Definitely. So I think on the consumption side, so that, the urban consumption has been strong, right? And you're seeing 2-wheelers getting, they have grown well. But on the other hand, if you look at, tractors and autos that are linked to the rural economy, they have not seen that pickup, right? The monsoons haven't been up, very good. There has been inflation and the rural demand hasn't picked up, and it has been the case since COVID, I think, right?
Sure.
And I think that is having a play there. And, even though we expect the festive season to bring on a cheer, the rural demand, I don't think anybody is confident that it would really pick up during the next few months. Even though this being again an election year, we could see some benefits going out to the rural economy and bringing it back. But, it is still somewhat of a worry, right?
And do you think there are some structure? Well, it's probably very difficult and probably a much longer discussion. But do you think there is something structurally an issue with the rural demand? Do you think it's because a lot of them may have spent, again, like we discussed earlier, in the pandemic season, there might have been that spurt of pent up wallet and being spent? Or do you think why do we think that there is this lack of confidence that the market is showing and we are seeing in the data for rural consumption?
Right. I think that's again a very, very difficult question to answer, right? Like, see, rural demand, I mean, see, it's a struggling sector itself, right? I mean, even though there has been support coming out from the government, the rural consumption is totally dependent on the inflation that they're seeing, and right,
Yeah.
and a lot on the agriculture sector. Agriculture sector hasn't seen that resurgence with the monsoon not being that good, and inflation has been a concern, right?
Correct.
So that is again that has been a worry for some time, right?
Sure. Yeah, I think you're right. It's probably a lot to do with food inflation and the fact that monsoons have really been a worry for the agricultural sector this year, at least. Along with probably, I think we are hearing also cotton. Recently, I heard I was reading an article that cotton has sort of seen a lot of these pests coming in, and they're expecting the crop to not do well in the current season as well. So.
And even in the budget, if we saw last year, the focus was on infrastructure instead of, SOPs for the rural India, right?
Sure. Yeah.
Now let's look at the valuations, right? So the valuation concern that people have. So this is a very interesting slide that I picked up from a Motilal Oswal report. So that we'll see that the valuations for the Nifty, right? If you look at the P ratios,
yeah,
they are still below the 10-year average, right? So we are not in any sort of worry where that is concerned. If you look at PB ratios, we are slightly higher than the long-term average, but still we are not near anywhere near the peaks that the numbers have reached, right?
Sure.
Similarly, if you look at the trailing, so these are the forward P ratios, which is based on forward estimates, right? So these are still low. If you look at the trailing P ratios, which is based on historicals, we're still hovering to a 10-year average on the P side. We are slightly higher on the PB side, but nowhere near any sort of big peak, right? So I think on the valuation side, so that like we said, that certain segments have become overvalued, but on the overall level, there's a mix, right? There is overvaluation and undervaluation across the market.
Correct.
Yeah. There is another interesting slide we have next, right? Where we are seeing the recent performance of sectors and recent performance of, the market, obviously after correction, August on the Nifty, we saw a resurgence happening, right? In September, if you look at month on month, PSU banks have done the best in the last month. Telecom again, right? With the 5G coming in has done well. Oil and gas because of the energy price hike has done well. Capital goods and infra continue to do well. And small and mid caps have got a lot of love from investors, right?
Yep.
We've seen FIIs become net sellers in September, but DIIs are still strong, right? And we expect DIIs to at least continue being strong with the festive season coming in, right? Festive season is the time when we all invest. So I think that is where the DI investment would continue to be strong. And the FII movement, I think, would totally depend on what's happening in the global market, right? Even though, I think people across the world are bullish on India, right?
Yeah.
Now, yes. So let's talk about earnings next, Siddharth, right? Yeah. So on the earnings front, I think there is people expect energy sector, consumer discretionary and material to do really well, right? Because of the rise in crude prices that happened last quarter, resurgence in metal and material prices that happened. We expect, you can see these estimates coming out from Bloomberg, right?
Yeah.
Ultratech, which is a cement player, which is again, a material player, it is expected to give you the best growth. And on the other hand, and then you have a few auto sector stocks and a few banks here and capital goods, right? Which are expected to do well. Oil and gas, Reliance Industries is expected to do well. But on the other hand, if you look at the lowest performance, you see a few IT stocks, and chemicals, and a few of these stocks there, right? So if we go over sector by sector, Siddharth, I think capital good right now is expected to give a boost to the earnings season, right? And next, because of the government spending, obviously, and then you have if you next talk about IT, right? IT is still not expected to do that well, right?
Correct. And so why do you think that is? Do you think a lot of it is coming from a lot of these, at least the top IT firms, the large caps IT firms that we have in India, a lot of them have international businesses as well, which means they get a lot of, a lot of it is impacted by what is happening in the US, the European markets, kind of maybe even being priced out in some cases with other Southeast Asian countries coming in with cheaper resources and sort of better technology solutions for those countries, right? So why do you think IT has been sort of going through this very up and down phase in the last current quarter and the last quarter as well?
No, definitely, like you said, right, that a lot of Indian IT depends on orders coming out from the global markets, right? Especially from global banks, etc., which haven't seen, a pickup. And I think the same momentum would continue in terms of earnings for IT, right? We would not see some very, very big numbers coming out from the last quarter, even though I think this might be the bottom of their cycle, right? We might see resurgence happening in the further quarters, and the commentary coming out of the management might improve, right?
Sure.
Last quarter, there had been a focus on digital transformation, AI, etc., right? And those things could come into play this quarter. I think the commentary could improve, but I don't think anything could drastically improve for the segment. But yeah, I think IT is at the bottom. The valuations are low, and people are looking at it. People are paying attention to IT right now.
And so speaking of IT, it's obviously probably the right industry that will sort of really leverage AI, right? And we're seeing, I think Wipro and a couple of these other larger firms had done a few research, and they found, I think 30-35% of increase in productivity for a lot of their code development and sort of HR functions, etc. It's definitely interesting because I think probably in the next, maybe not in the short term, but at least in a medium term outlook, a lot of that would potentially help the IT sector because everything sort of gets automated and there's a lot of value that can be extracted from that. But two, there could also be a negative impact for them, right? Because we could see a lot of these companies that were outsourcing a lot of solutions to Indian IT firms and other BPOs, they may very well just use AI to solve a lot of the problems.
Right. I think that could happen. AI itself as an industry, if you look at a global market, so that a lot of interesting stuff is happening, right? If you look at, the writers' strike and whatever happened in the US, right? There has been a lot of negative commentary about AI, that it is using, especially on the chat GPT and stuff like that, right? They're using people's IP, right, to create those answers, and they're not rewarding the actual creator of the content, right? So there will be regulations coming out into AI, and all that will have an impact. But I think Indian IT players are, building that muscle, right? That now they can take a step into AI, right? And I think that should have a reward. We have a huge workspace in the Indian IT segment, that if they are equipped to build these AI products, right, they will have a long way to go.
Sure. No, absolutely. And I think something that, just while we're on this topic of AI, another industry that is looking at coming up with regulation, I think, is the entertainment industry. And we're seeing a lot of music players coming together, and at least in the US, I think, and European markets are trying to, because I think the biggest challenge for a lot of these audio-based companies is that they can use, AI to quickly teach them, and then a lot of sort of YouTube videos and other entertainment sort of products can be launched without them getting the benefit of it. So yeah, I think there's a lot of opportunity there. Absolutely.
So, and I was listening to a few podcasts about this topic, right? People are talking that, these companies, like when Google came in, right, initially they did not have any regulations, right? They could show anybody's content, but then the regulation stepped in, right? The actual creator of the content has to be rewarded, right?
Correct.
And that is what might happen. A few licensing, few lawsuits and etc. will happen, will regulate the AI industry, especially in the content space. But I think, and I think it will be good for the industry itself, and as well as for the creators, right?
Sure. No, absolutely. And I think, so I think government might be a little slower. And when I say government, maybe I'm saying globally, but the private industry, like social media, we're already seeing a lot of them trying to come up with different tools. Google is doing that on their side as well. So I think they will probably be the first sort of force to put up these regulatory barriers, and then that maybe gets overtaken.
And
So,
even right now, there has been a lot of, like we know, right? Google suppresses AI-based content, right?
yeah,
And
yeah,
same across the board. Okay, so let's move on to other sectors, right? I think you talked a lot about AI.
yeah.
Yeah. Let's talk about banking, right? So banking is still seeing a robust growth. It's driven by retail and SME segment, right? The earnings for private banks will be healthy. PSPs will again do well, but we will see some suppression on the margin coming in. The operational expenses are high. The net interest margins will see a stagnation, right?
Mhm.
And because markets always work on expectations, right? So with a plateau coming up in the interest margin, etc., there might be some concern on that side. But still, banking will continue to remain one of the best segments in the market, right? So, Siddharth, let's move on to the next one,
Sure. Yeah.
which is oil and gas. Oil and gas last quarter, we saw crude oil surge up, so that will benefit OMCs and the refinery margin, etc. And yeah, I think Reliance will post good numbers right now that the oil prices have been high. Um, Talking about pharmaceuticals again, are driven by US market right now. The domestic demand hasn't been that good, but the US market has given a big growth to this segment, and we'll see good numbers coming out from the pharmaceutical sector as well, right?
Correct. Yeah.
What we have not written here is autos, right? Again, for autos, like we discussed, right? Rural demand, they will have an impact, but the urban demand is still going strong. And festive season will be interesting for autos, definitely. With Tesla coming in and all that, right? Auto series and all these things will have a good time in the future.
Yeah.
Yeah. Now let's move on to another interesting topic, which is the treasury yields, right?
Yeah.
So we saw the yields rise sharply and bond prices crash over the last few months in the US, right, which has been a big event, right? That type of a meltdown in long-term bond prices is something that people saw in 2008, and there has been a concern, right? Even though there's not a lot of stress in the system, right? It's not like financial 2008 that the whole system is undergoing a big amount of stress, but because of these high rates and the bond prices have had a meltdown, and it will have impact on all global asset prices, right? And I think it makes sense for a US investor to diversify across to global equities, Indian market right now if they want to get returns on their investment, right?
Sure. So speaking of debt, let's say what we are seeing. So there are two points here, I think, that might be relevant. One is that from a US perspective, we're seeing a lot of it's probably a very high debt that they have, and it's ballooning. I think I was reading an article and I saw that they had added about 500 million in terms of debt. Million or billion? I think it's a billion, sorry. 500 million, I think it is. And they added that in the last 10 or 15 days. And that number is obviously we had the recent debt ceiling, and they're sort of again it's a very cyclical loop that they go into, right?
Right.
Do you think the US continuously adding and growing its debt component of the balance sheet without sort of taking any measures to restrict it, do you think that will have what impact will that have on the Indian economy essentially?
See, US market, we saw a credit rating downgrade. We will again see a government shutdown because of this debt issue that they have, right?
Yeah, yeah.
I think they have been, the QE that had happened post-COVID was very drastic for them. And now they are struggling with the consequences of it. And, the rates will not go low while this problem is there, right? The
Sure.
US market will not cut down rates while this problem is there. And that could bring on a recession in the US, which would have implication on the Indian market. But right now, Indian market stands out because we have been prudent fiscally, right? We are doing well as an economy, and investors across the board are coming to India to invest right now because they're seeing growth here, right? Rather than in any other geography. So I think there are pluses and minuses of it, right? If there is a decision that happens, right, or if there is a bigger consequence of this ballooning debt,
Mhm.
then obviously it will not be good for the global market because, we are very, very highly linked to what's happening in the US, right?
Of course, of course.
Yeah.
And the second point that I was sort of talking about here would be from China's perspective. Again, China has a huge amount of debt. We all know kind of what's happening with the real estate sector there. It's
Right.
been going through this sort of up and down curve with a lot of the firms, very large firms, going potentially into bankruptcy, and the stock market sort of crashing there in that sense.
Mm.
What kind of an impact do you think that would have on the Indian economy as well? And again, when I say that, I'm also talking about the fact that
Mm.
China is maybe will continue to pump in money because they need to boost their economy, right? So what does that mean for India?
See, China is a little bit relatively unlinked to the global markets, right? They are not
Mhm.
that much tied up into the supply chain, even though when China recovers, you will see the metals prices and commodity prices start moving,
Mhm.
right? So they do have a big implication on the commodity markets.
Mhm.
And while China is going through stress, people are looking at India, right? So I think that is again, there are different aspects of it. China plus one strategy works for us, but on the other hand, when China moves, it sort of moves the commodity markets and impacts the whole world as a thing, right?
Correct. Yeah.
Yeah. So yeah, I think
Interesting.
so to quickly go to a few other
Yeah.
key points, right? So this
Mhm.
is about recent projects, right? So even though Siddharth, you want to explain this?
Yeah, sure, absolutely. So I think what we have seen is government capex is obviously increased. We all know what's been happening in the last quarter and the current quarter, and the budgetary allocations. What that means is that obviously government has been spending a lot more in different in different sectors, and we probably expect that to continue in the upcoming election season as well. But when we look at the data, what we're seeing is that I think there's about 600 projects that were on average being completed every quarter. But in the last quarter, this has sort of slowed down to about 500 projects.
Mhm.
And what that kind of is showing is that there is a sort of anomaly where the completed projects are happening and they're sort of being completed and everything is going well, but new investment announcements are slowing down. And that could be an indication that at a overall level, maybe the total investment that's happening um, could be dipping, right? So that is something that we need to sort of be
Right.
vigilant on in that sort of space. The second, so yeah, why do you think that is the case? Just sort of trying to understand a little better.
Right. I think again, the growth domestically and the growth in the global markets again plays a role here, right?
Yeah, yeah.
Government might be spending a lot, but there might be a dearth of material. There might be, the inflation is hitting the prices, etc. Right, which is causing this impact. If the growth is not there, global market, right, then the manufacturing growth in India will not be that. What will be the impact of it, right?
Sure, sure.
So I think those are the things. Plus, I don't know. There might be other implications. Other indications coming out from the government that we are not aware of, right?
Sure, sure. Absolutely. Absolutely.
Yeah.
Okay. I think we can move to the next slide as well, where we can sort of probably look at a few other trends that we're seeing here,
Yeah.
right? Which is so on the digital front, we're seeing obviously UPI has done phenomenally. I think if anyone has traveled outside India, you'll realize how difficult it is to sort of make payments. It's either cash or debit cards, credit cards. So in most of the developed economies, so I think we've seen, I think 10 billion transactions that have happened in August, and that number will probably continue to increase. With UPI also as a technology being outsourced to a lot of European and more developed economies as well. So I think projections are very strong for the digital payment sector, where we expect a very strong upward trajectory there. Digital commerce is up, credit card usage is up. So there's a lot of positives that are happening from the digital payments perspective. And a very related point here would be what is happening from the 5G angle as well. We see very, very strong adoption in 5G technology and 5G sort of resources within India. The network has been building slowly. I think Jio and Airtel have been the major contributors in terms of building that network. There was an Ericsson lab report that came out recently, a consumer lab report, which showed some interesting statistics. I think one of them was that there are about 31 million users in India who are expected to buy 5G smartphones in the next 1 year, which will take our total to about 100 million, which is a huge number, right?
Right.
And I think the second point here was that Indians, when you compare them to other developed economies who have adopted to 5G early on, are spending about 2 hours more per week on these sort of apps using 5G. And what that means is that for the technology sector, or anyone who's building with 5G in their mind, there's a lot of opportunities here, right? So the telecom sector has a lot of opportunities here with sort of distributing API networks. There's a lot of monetization strategies that could be sort of at play. Better and more enhanced network opportunities that could maybe create very premium sort of services for the sort of niche audience are expected, and I think that will probably continue as we sort of go ahead into the future as well.
Definitely. And I think the new age segment has been under pressure recently, is that. But I think with the earnings coming in, I think Zomato is expected to post good numbers, and with the the surgeon that we're seeing in the payment, maybe Paytm might also become interesting in the next quarter, right?
Correct. And even unlisted startups, like I think Oyo is, I had read that they're also going to be posting strong numbers, or probably already have. So I think we're seeing positive trends in terms of profitability, in terms of seeing a lot of these new age companies take value of the digital transition that's happening in India right now.
Definitely. Yeah. Awesome. So I think we have covered most of it. I think one question that we would also see in the chats, right, is about the Israel conflict, right?
Correct. Yeah, this just happened.
It just happened, and the implications of it would be, it's a ongoing conflict that has been there, but it has escalated very drastically, and it's very tragic what's happening out there.
Yeah.
Yeah, but I think there has been a lot of geopolitics at play, right? Iran is supporting Palestine, right? And
Yeah.
US and Germany and all the big major countries. I think India has come out in support of Israel, right? And there might be escalation of the commodity prices. The global trade might be impacted, and crude prices could be impacted because of this, right?
Absolutely. So Iran is obviously a very big player in terms of the oil industry, right? So I think this would definitely have an impact on crude oil prices for sure. Going into it, probably global markets on the developed economy markets, at least on Monday morning and in the next week, will probably be very volatile. We'll probably see we could see a lot of fluctuation, I think, and that could maybe have an impact on the Indian market. What do you think?
Yeah, no, I think definitely crude prices, when they move, it does have an impact, right? It impacts. India is an importer, big importer of crude, right? And any movement in crude prices impacts our whole current account balance. It impacts our imports. It impacts a bunch of industries, right? So such a movement would definitely impact India, but it is an evolving situation, right? We'll see what happens, right?
Correct. And I think so. I think one thing that we could, again, it's just sort of thinking about things here. Another thing that could happen is a lot of we could see some movement into safer assets for some countries globally, right? Gold and other safe havens could probably be seeing some sort of a demand boost there as well.
Right. Yeah, I think I think that wraps up our discussion, right, Siddharth? And let's now move on to the audience. Guys,
so let me go through their questions, and I'll try and ask some of them to you. Let's start from the first one, and guys, please feel free to keep commenting. We'll try and take as many as we can today. So the first one is from Abhinav Tripathi. He's asking, he's a balanced multi-cap subscriber. What is the rationale for including Idea Cellular in the recent balance, as Idea has been losing market share and obviously has some debt in it?
Right. No, I think Idea in our portfolio, Siddharth, has been momentum pick, right?
Okay.
The balance multi-factor, it has come up as a momentum pick, and you can see the performance for Idea in the last 6 odd months. It has recovered 70-80% in terms of price performance, right? And like we were talking about the telecom sector as a whole, right? It has seen a resurgence, right? So Idea right now has come up as a momentum pick into our portfolio. And if you compare Idea prices with the Bharti Airtel, right? you could see that, Idea has had a big run up compared to that stock, to the comparables, right?
Mhm.
And I think the projections in the future also for Idea remain robust. And
Mhm.
I think that's because that Idea has sort of come into the portfolio. But yeah, we'll be walking. It is a volatile stock, right?
Correct,
And
correct.
I think that is the concern, and we'll be watching for that, right?
Fair enough, fair enough. So I think the next question that we're kind of seeing here is from Finance Guru. He's asking, are SME IPO something that we should consider? And I think where this is probably coming from is that we're seeing this sort of SME space has been on an uptake. There are a lot of IPOs that have been happening. I think there was around 100, more than 100 in the last 9 months compared to what has happened in the previous year, which was around 60 to 70 maybe.
Right.
So what do you think about SME IPOs? Just any sort of high level thoughts?
And definitely SME IPOs, have been a big uh, investment opportunity in the last few quarters, right? And you wrote about SME IPOs recently, Siddharth, right, for our blog.
Yeah, yeah.
So much interest in that segment coming from investors, but right now we've seen some amount of again, with the market volatility, IPOs are very sensitive to that,
Mhm.
right? But yeah, I think as long as the companies coming out with IPOs are coming with good valuations and coming from good industries that have a good path ahead, I think that should be interesting. But we can't add IPOs. I mean, we don't add IPOs into our products, right? Why is that? Because we typically try to look at the data, right? Either
Mhm.
momentum or fundamental, right? We're looking at data to analyze companies, right?
Mhm. Mhm.
So you might not see a company with very less amount of data come into the system immediately, but eventually, you see like some of the IPOs that have come recently, right? Within a 2-3 month span, they do come into our portfolios if they have good potential, but we don't do IPO investing as such in the small cases, right?
No, no, absolutely. And I think the point to think about with SME IPOs is that there is obviously a lot of risk. One is that there is limited information in terms of about the company, the stock, etc. The other is obviously that there is this there's a very detailed article, you can obviously find it online, where they're talking about some sort of um, price movements that are happening in SME IPOs, and SEBI has been sort of looking at it very closely. So that is something that you should really do your research on and try to figure out if those SME IPOs, while you might be seeing sort of blockbuster returns, if that is really something you want to get into given the high level of risk that is involved in that sector, right? Great. So I think another question that I can see is on Israel. I think we'll try and come to that probably towards the end. There's a couple of questions on it. Neeraj is asking what will be the right strategy and how much money should he invest in Alpha Prime. So yeah, just sort of high level thoughts here.
Can you hear me?
Yeah, I can hear you. Are you back? I think we lost you there for a second. Do you want me to repeat the question?
Yes.
Okay, sure. So Neeraj was asking what will be the right strategy and how much he should consider investing in Alpha Prime. And his question is probably coming from the angle of trying to cut down cost. So what do
Right.
you think is the right sort of way?
Right. So in terms of cost, I think it's a 30,000 for minimum investment portfolio, but the cost for it is 3,600 rupees for 6 months, right? So if you do the math, I think that the ideal size to invest into such a strategy would be around 2-3 lakh for you to keep the expense ratio low. But in terms of profit potential, I think it does have a big potential, right? It could give you sharper returns even with lower amount of capital that you invest into it,
Mhm.
right? So you have to do a balance out between those two things, right? Compare the profit potential as well as the cost and the expense ratio that is you are incurring based on the amount that you put in, right? And take a decision based on that. We'll see if the market remains strong, right? It would be one of the strongest strategies that we would be offering, right? Because it is highly concentrated momentum stocks, and it could give you the worth of your investment in the long term. But I think you have to find a balance between the expense ratio as well as the return that you sort of aim to make from this, right?
Sure. And I think a point you made earlier, obviously on Alpha Prime momentum, was that they do well when we're in a bullish phase. And do you think, I'm just sort of elaborating on his question, let's say now, do you think India is in this bullish phase for the next few months to a year, 2 year, 5 year, 10 year period?
Right. So that again, like I always tell people that, I cannot tell you what happens tomorrow in the next month or next year, right? But we can look at the pluses and minuses of it, right? Like the positives are there that, eventually maybe in FY24, I think probably the rates would be cut and, we would see money coming back into equity, right? That resurgence happening. So that is one positive that we are all betting for, right? But we have reached a peak of high rates, right? And we will see recovery from that in the coming few months, which is a big driver for the equity markets, right? So that is a plus. On the other hand, the crude price situation, which escalated last quarter and then eased, might again escalate with the conflict happening in Israel, right? And then you have on the negative, there will be volatility coming up, maybe because of the election, not sure what happens, right? Either way, it will have an impact on the markets, right? And then the strong growth of India, right? You gave us examples from the 5G and digital segment, which has been extremely strong, will be a positive. The consumption, will have a few things happening around it. The RBI says that the inflation might be low, but we have to still see that happen, right? We still have to see if the real demand recovers or not, right?
Sure.
So I think few things at play, but the biggest driver would be a rate cut happening in the US and in India in the next year, which would bring money into equities, right? And we think that the next few years might be strong for them.
Fair enough. I mean, just sort of throwing some light here. Very interesting sort of fact that I sort of really think about is that when you look at household debt as a percentage of the GDP, right? When you look at, let's say, China, I think it's around 60-70%. Similarly, for US, UK is probably higher at about 80-90%. India is probably sitting at about 10-15% right now. And that is probably why we are also seeing a lot of the fintech players, a lot of the banks focusing on credit cards and increasing the loan aspect of the economy, right? So
definitely,
I think that'll really grow, and as the GDP grows, that should only grow, I think, from there. So I think there are positives here for India for sure.
Right. So I think everybody is betting on India's economy to expand, right?
Yeah.
From credit card to markets as well, right? So markets also have a very small penetration in India. So you would see that recovery happen as well. We would see, like you said, digital, you would see credit, everything would expand, and it will all depend on how far the regulations adapt to it, how far, how supportive the government is, obviously, right? But, these are all great bets to make for the long term, next 10 years.
Correct. So yeah, quickly just moving on to trying to answer all of these questions that are coming in. Vijay is asking, railway sector stock will continue to grow like last year. Are we holding, as we are holding Titagar and Ircon? So there's another question on, I think, Ramakrishna Forging as well. So yeah, just to sort of any thoughts on that?
So I think, again, looking at these sectors, like we said, the infrastructure stocks might have become a little bit overvalued, but, if you look at stocks like Titagar and RK Forge, right, they are also expected to give very good earnings in the next quarter, right? So the earnings might keep up with the valuations that these guys are seeing because of, the investment that's happening from the government and, the big focus on the railway sector coming from the government, right? I think these things will definitely come into play, and we would see this segment. The earnings will be strong, right? That's why we are not very, very worried about having railway stocks in our portfolio right now. But definitely the market forces will come into play, and as things evolve, we'll reevaluate the investment to these stocks.
Fair enough. So I think Chota Cricket Deck has asked a question which was on that he's a moderate risk investor. Should I invest in small caps? If yes, then how much? I think that if yes, we've already kind of covered with Alpha Prime there, but just for moderate risk investors, do you think small cap makes sense?
For moderate risk investors, see, small caps make sense, but also have a few large caps. So keep a mix of them, right?
Sure.
Put all your money into a small cap portfolio. keep a mix of a slightly balanced portfolio along with some allocation to small caps, right? That is what I would think.
Yeah, so I think it's about diversification and trying to sort of figure out with somewhat of a smaller allocation to small caps is probably what it is. Harish Kumar is asking, should he invest in SIP through small case? Returns are good. Where would you understand? Okay, I think Harish, you can probably just look at the website for small case or Wright Research and you'll find a lot of the data there. There is a question on discrepancy. Maybe you can shed some light in terms of this. The question is 3-month performance for Alpha Prime was around 23%, but the performance of the benchmark shown in this PPT was around 8%. Whereas the benchmark in small case is showing 16%. He's asking why there is a difference.
Okay, so we can check. See, sometimes what happens is, when small case shows 3 months, they're looking at, let's say from 8th of this month, right? Today's the 8th, so they're comparing it to the 8th of 3 months back, right? Whereas our data might be based on end of the day, end of the month points, right? So we're not considering October performance. That can be discrepancy. Plus, the data source might have some differences, right, between us and
Sure.
that could be a reason. But we check it, right? We try to make sure that everything is reconciled.
Got it. Great. Okay, so this is a great question. Warrior Terminator is asking, I plan to stay invested only in right momentum for decades to come. However, when momentum reduces or is in a bear market, is it advisable to stay invested in that, or is it time to shift? What's the thought there?
Yeah, so I think we create the portfolio so that it is invested all the time, right? And depending on the risk that we see in the market, our allocation will change, right? So if you look at last year, right, 2022, we did have a lot of large cap, we did have a lot of FMCG, we did have a lot of safer allocation in momentum. It sort of held up in that market as well. We went out of the portfolio into cash, right? Depending on the market scenario, right? So we maximum went into 15 into cash at that point in time last year, right? But if you look at, a 2020 like scenario, we would have gone 30-40% into cash, right? So we will do that allocation decision, and the idea is to, the strategy is for any given market, right? It's not like, after a certain point you stop this and then you start this. That's not the intention of creating this. This is built in such a way that, the allocation would cater to any given market scenario. And you might see a year where, you might see a muted return, but, if you stay invested, you would see, the potential return that come out from a strong market come into it. Right?
Sure. So I think this very quickly helps us go on to the next question, which is kind of talking about from Vijay, where he's asking, Nifty's been under pressure, could go below 1840 levels as well, 18,400 levels, sorry, as well. Do you think it's the right time to do SIPs when you look at Alpha Prime momentum in these bearish markets, or is it better to so-called, time the market? So just sort of some few thoughts on that as well.
Right. So I cannot tell you, 18,400 is something that, I don't have a vision on. I don't think, that is something, we are not looking at any numbers, right? 18,400 or 20,400, right? Anything could happen. But I think it is, you should choose, if you want to invest, you choose a investment that caters to your risk profile and allocate to it. If you ask me about these portfolios, right? So right now we are not moved into cash. We are still taking risk into these portfolios because we expect the market to be strong, right? We expect a very sharp crash. Otherwise, we would have ourselves move into cash or, safer stock. So we do see that potential, and we think it's a right time to stay invested. And as the market evolves, these portfolios themselves will, adapt to the risk that is there in the market.
Sure. And I think an SIP, if you're not, very technically involved and looking at the stocks that are there happening on a day-to-day basis, right? As a general investor, an SIP is probably the right approach for most people, depending on your sort of considerations, right?
Right. Yeah.
Great. So there's a few questions on Israel. We'll try and sort of ask all of them together. So there's a question here. Sekhar is asking on why we haven't added Indian healthcare tech or pharma in our small cases. Any particular reason or any thought there?
No, not really. We've had a few pharma stocks come and go. We've had Polymed, we've had Natco Pharma, right?
Mhm.
We've had a few pharma stocks come and go into the portfolio, right? And I think depending on the philosophy that a particular portfolio might be following, right? So, you've seen if a momentum, like a Polymed came into momentum, right? When there was momentum in a particular stock. Similarly, in the balanced one right now, you might have a few pharma stocks, I'm sure, right?
Mhm.
And which depends on the factors that we are allocating to. So we do bring in these stocks as depending on the philosophy that the particular portfolio is following, right?
Mhm. Fair enough. And so we are also, so this is a question that someone has asked in terms of the Cricket World Cup. Do you think that will have an, what are the sectors that could do well, or do you think, the Cricket World Cup?
So that is happening in India, right?
Correct. It is happening in India. Yeah. But we are already seeing a lot of, so I
Yeah.
think hotel prices
Yes.
across cities have just exorbitantly gone up.
Right. So yeah, so I think definitely that would bring in consumption, right? When we were writing that blog on the festive topic, right?
Yes.
I saw that stat ki whenever Taylor Swift performs in the US, she boosts the GDP by 1% or something like that, right? So obviously an event like that happening in India, right, will bring in tourists, will bring in a lot of activity, a lot of consumption, a lot of uh, things happening in the economy, and that should boost the GDP itself, right? So that should definitely, like, it's the biggest event that India has, right?
Correct. Yeah.
Yeah, so it should definitely bring a cheer, especially to the consumption sector, tourist sector, etc. Right?
Yeah, absolutely. There's a question that was there on the chat. They've asked us to sort of consider the form questions as well. I'm just going to quickly go to that. Sumanta was asking, he's an Alpha Prime subscriber. He understands that there might be short-term corrections, but he's asking in the, let's say, 10-year or a longer term phase, what is the sort of average CAGR that he should sort of be looking at?
For
And
the Alpha
he's
Prime,
for Alpha Prime, yes. And then he's also asking, if he wants to add new money, when would that be a good time? He wants to sort of do, he's not an expert, and wants to know when, bulk investing kab karna chahiye, essentially.
right. So I would say that if you have a long-term vision, right, if you want to stay invested in this portfolio for the long term, that any time is a good time to invest, right? Because we expect, it to have a good CAGR number. Again, if you ask me for the expected CAGR, based on our back test and based on analysis, right, the numbers look very exceptional, right? You would see a number like 50, which is not something that, we should talk about when we are giving you a back test, right? So that talking about a 50 on a back test is not reasonable, I think, right? But yeah, we expect it to do, I think 30+% is something that we would say, right, is expected based on what we've seen in the recent past. And we could expect those type of numbers, but please, if you have a long-term plan, right, then don't try to time an entry, right? Because any time you invest, we expect a good CAGR coming out in the long term, right?
Correct. A lot of it is very dependent on what. So again, if we expect India to do well, if we expect global markets to do well, and you're looking at a very long-term horizon, which is typically the case when you should consider equity markets, anyways. Then you need to have that longer-term vision, and it's really about very archaic saying, and everyone keeps saying it, but it is true. Timing the market isn't as important as sort of time in the market, and I think that's the broad sort of thought here. So there are a lot of Israel questions. We will try to answer them. Let me just quickly see some other questions. Okay, so there's an interesting question. When do you, obviously through market corrections, you probably see this, but Gunjan is asking, when do you think you could observe excessive drawdowns in the momentum or other small cases as well?
See, when do you see excessive drawdowns coming in? It will depend on the markets, right? So if there is a risk event like what happened in COVID, right, where people just dumped equity, right? And then no stock sort of works. So when equity market itself is going through a stress, those will be the times when you will see deeper corrections happening in these portfolios. And again, when such a situation happens, and when there is an unforeseen risk that comes up, you will see us deallocating, you will see us managing the risk and moving to safer assets. And that all will come into play. But those are scenarios where any sort of strategy would come into stress, right?
Sure, absolutely. So again, a lot of questions on geopolitical instability, Israel. We will try to get to that right at the end. There's an interesting question here. Yogesh is asking, is it the right time to enter the power sector stocks? What are your thoughts also on NBFC, if anything?
Right. I think, I think it's an interesting play right now, right? And in terms of valuations, I think we are seeing a slight uptick in the valuations, but the earnings, when they come out this quarter, will hold out very strong, right?
Mhm.
And those valuation concerns might be a little bit, we might get a little bit over those concerns when the earnings come in.
Mhm.
Right. And I think, you could definitely start looking at the power sector, especially, those stocks that have a view on the green energy segment. Right?
Sure. No, absolutely. And just again, quick, we'll try and wrap this up very quickly. There's about 5-10 questions left, maybe. Is there a max amount we can put in the small cases that you feel is appropriate? Obviously, it's a very personal question. I think it really depends on their own individual risk preferences.
Yeah.
That's the job.
Yeah, it definitely depends on the risk preference. But yeah, like I would recommend that, keep a cap of like 20-25 lakh on a single small case, right? Because beyond that, your order size will become very large and, you might have a big impact coming out from the market.
Sure.
Right? Yeah.
Any thoughts on the fertilizer sector going forward?
Again, we saw in our slides that fertilizers have been under stress based on prices also and valuations also, right? And we have seen some movement happening in fertilizer stocks recently, but we don't have any big view coming out of researches of that particular segment yet, right?
Sure. Well, a lot of that, I think, like we discussed, has to do with food inflation, etc. So I think Devashish, you can probably refer to that going back. Inderpreet is asking about Alpha Prime, and he wants to sort of have the option to customize when rebalances are happening in terms of buying the new stocks but not selling the old stocks. So I think Inderpreet, you can do that on small case. I think there is a functionality where you can decide what stocks you want to buy and sell depending on your preferences, essentially.
You can click on manage or you can click on customize, right? And it is very easy for you to customize.
Yes, absolutely. Power Prashant is asking, is there a small case I can recommend to my father who was recently retired at age 60? And there's another question, if we should let's go through that.
Right. So I think, see, your retired father should have a asset allocation component, right? He should have some allocation to debt and some allocation to equity. Right. In the equities portion of his portfolio, many of our small cases can become a part of it. I think a balanced small case that we have can be a good, can become a large portion of that portfolio, right? Which is the equity portfolio. Momentum could also be very interesting portion of that portfolio. If you want, slight allocation to high risk, then Alpha Prime is something that we would look at. New India again is, one portfolio that is doing quite strong, which might be interesting, right? So, but the idea is that, make sure that his asset allocation is in play, right? He has debt and he has equity, then in the equity section, you're giving him allocation to these portfolios, right?
Sure. Okay, I think if we're still getting a lot of questions, I think we'll try to wrap it up now. Maybe we can touch the Israel topic again. We're seeing quite a few questions on it. Just give me a minute. A lot of that has to do with one, what is the impact that we could see in the Indian markets in the next week, 2 weeks. Another has to do with what would be the impact on global crude oil prices, and how should people sort of be thinking about the Israel-Palestine war that is going on right now.
Definitely. So I think one big thing that would happen is that gold prices could see a definite recovery Monday, right?
Yeah.
We would see a resurgence in gold prices because people will pull, like when the Ukraine war news came, we saw people quickly move towards gold, right? Especially in the global markets as well, right? So that would happen. Plus, it's still an evolving thing, right? If Iran takes a step here, then you would see the crude prices escalate again, right? And other players like Russia and Saudi could come back and put pressure on crude prices, if not on the geopolitics, right? So there are various variables that at play, but we'll have to see how it evolves, right?
Correct. I think it's an evolving situation. It's obviously a very sad, tragic situation that they're going through. But in terms of the global markets, there will be volatility probably in the next week. It could very well have an impact on the Indian markets as well.
Right.
Crude oil prices will probably skyrocket in the week as well. Great. I think that's it. I don't think we have. I think there are more questions that keep coming up. Maybe we can touch those on the next session that we do, or we can try and sort of get back to you guys on a separate sort of platform as well.
Right. Yeah, I think we have had a good session to that, and thanks a lot everybody who joined in. Right, on a Sunday, it makes us so happy to get to talk to you folks. I hope this session was useful for you and gives you a sense on our perception of the market and how to analyze the current scenario. We've covered up quite a few topics, right, Siddharth?
Yeah, no, I think we've touched a wide variety of topics in I think in very good depth as well, covering volatility to market corrections to a lot of what's happening in the global markets as well, and how that could have an impact on the Indian markets. So I think it was a very good session. I hope everyone enjoyed it. Please do give us a like, a comment, a subscribe. All that sort of stuff helps us as well.
Definitely. And do comment on what we should cover next, and if you want more such live streams from us, please do let us know. It's really helpful for us, right?
Correct. Absolutely.
Yeah. And guys, have a great Sunday and a great week next week. We'll see you soon.
Thank you guys. Take care. Bye.